Hey everybody, welcome back to the channel. Today we're going to go over the Fed's decision on interest rates. I was actually shocked by today's move. We're talking 0.5% interest. I did not expect this at all, which I guess just adds more to what the Fed has done for the last couple of years or so, where they have been just cushioning the economy and you could say investors, the market, from having a tough time. And every time that something goes wrong, they just get involved and solve everything. So today we're going to go over some of the remarks that Jerome Powell made today. So far, what's forecasted for the rest of the year is 1% cut. I believe that's possibly including the 0.5% that we had today. So that possibly means that next month we could get a 0.25, and then next month we could also get a 0.25. If not, we'll get another 0.25 in December. At least that's for 2024. So let's go over what Powell said today.
Good afternoon. My colleagues and I
good afternoon.
I could always on achieving our dual
if you're
mandate
trading
goals
during that good afternoon, things go really wrong.
And stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength
7%.
by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved.
Guys, on other news today, housing starts were at 9.6% versus 6.5% expected. Building permits were an additional 5% versus 1% estimated. And mortgage applications were at 14% versus 1.4% prior. So not only did we get an interest rate today, but it looks like some of the housing data from August came in pretty well, smashing expectations. So this means that we have a stronger than expected consumer, and it's interesting to see those numbers, knowing very well that how things are so inflated right now. So it's just interesting to me.
But remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to work.
Did you just say unemployment was low at 4% when the target is 2%? Did I hear that right? Let's replay it.
Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand.
Okay. That's probably enough of Chairman Powell. So, talking about a couple of things that he discussed. He's saying that inflation still remains above target. So the plan is still to get that down to the 2% that it typically is. He's saying that the labor market is projected to stay around 4.4% or 4%. So we're still not fully in the clear zone. So there still has to be some caution taken because this unemployment rate is still way too high. And not only are he saying that they're essentially ready to cushion investors and the economy in case anything goes wrong. He's essentially painting the way for further rate cuts for 2025. This is definitely going to remain to 2025 because the Fed funds rate is still, I think today it was at 4.75. I could be wrong, but it was at 4.75. So there's still a long way to go. I mean, historically, if you look at history, if we look at a chart and pull up the Fed's fund rate, we're historically still looking at a different, an average Fed funds rate than what it currently is today. But that doesn't mean that it's much higher than it was just 3 years ago before the pandemic. If we look at the screen, we're talking 2020. We're talking rates. I mean, obviously this was during the cutting. You know, we had a recession. We went down, but we were at 2%. We were at 2.4%, 2.5, maybe at its highest. And as of now, we're double that. So today probably dipped slightly. This figure hasn't been updated. This is from the Fed economic research. So if you want to take a look at it, you can. But compared to 1981, if you do an average on this, we're talking today, it's an average of 4%. That's still high, but he's basically promising that it's going to go down. And the market reacted today. It actually reacted a lot better than I expected. We're still on Wednesday. We still have Thursday, Friday to go through. We may see a small 2-3% downward day tomorrow. We might see a 2-3% gain tomorrow. It's really hard to tell with the S&P right now because everything's been so the volatility has been insane. One day the VIX is up 10%, the next day it's down 5%, so on and so forth. We hit an all-time high earlier today, like mid intraday. Yep. So most of the market hit a high today around when we received the news, which was around 2 today. That's usually the release. I think 30 minutes after we had the meeting. Dow Jones was 420. SPY hit, well, this is SBS, but it hit about, again, it hit a new all-time high of 577, and I'm not even 100% sure what this is. That's not even the NASDAQ or I have no idea what this one is. That the QQ is supposed to be the QQQ. What is this ticker symbol? I don't have time for this. Anyway, regardless, it hit a new high today, midday when the news came out. Then slowly continued to go up, and then by the end of the day, most things were down. If we look at the chart right here on the left, most things here are down. You got SPY, you got Microsoft down, Nvidia down. Apple's up. I guess someone's been waiting to buy Apple during all this. I wouldn't necessarily say that there was even a shift in investor strategy. I don't see too much green in one of these sectors. I mean, technology, everything's red except Apple. You have consumer, defensive, everything's red or even, except Walmart. I mean, there was no rotation today. It was just, we hit an all-time high midday. Then we had a small sell-off continuing to the day. We were up 1%, and then we were down another 1%. So in the meantime, my portfolio, I think, hit a new all-time. I have this Robinhood portfolio, which is, it's only a value of $10,000, and not even all of it is invested. But there was a nice all-time high around 235. But again, my only holdings are Nike and SoFi. Obviously, if you follow SoFi, it's financial stock. This is very good for SoFi. They're able to, they're not in a high interest environment. Great news. Will definitely help the stock move even faster forward. Because if you look at the SoFi chart, it's been up and down for the past year. Like it's been, if you've been holding SoFi for the last 5 years or so, and boy do I feel something for you, because I actually owned SoFi, I think, at a certain point back in 2021. I wish I had those buys here. I may have those buys here. Yeah, and I think I tried to play something here. I was buying September 17th. I was buying calls, and I was buying SoFi. Whether those ended in good or bad, I don't remember, because it was just so long ago. But this was it's possible that was also pre SoFi being, announcing that they had a deal. It could have possibly been before that. I think I bought September. I think I bought sometime around here. So it's possible that those buys gave me a quick return on my money. But yeah, I mean, if you've been holding this for a long time, you've just been miserable, and the company has beat quarter on quarter. It's just continuing, but just crushing expectations. So if you're seeing the move, this is I think we're on overnight. This is Robinhood trading only. So just because it's up 1% overnight doesn't mean it's gonna be up for you tomorrow. This is just Robinhood traders as conducted at night. But then we have Nike. Nike actually stayed surprisingly mostly green today. It hit a nice intraday high today at around 81%. Nike's still smaller. Is still a smaller position to me than SoFi, and that's because I feel like Nike kind of took off a little quicker than I expected it to. I bought in. I think I started buying around the mid. It was probably somewhere around here. I started buying around the 80s. I think I saw it in the 80s, and I thought, oh man, this was a really good deal. And then in a couple days, it just maybe realized that wasn't the best deal. So not to say that I'm not down at all. I have a total return of $21, which is essentially nothing. And Ever since then, I just been buying some of these slow dips and declines here. So my average cost is a little bit higher than I would like it to be. It's almost as if I bought now, but I bought most of my shares around here, and then I started buying some of my shares around here because I had some cash in case it went lower. Because if you look at Nike's chart, I mean the last support or a strong support in 2020 was 67. So that could have been a possibility where Nike was going to. But I mean, overall, I expect this stock to recover in the next couple months. So obviously, with no recession in sight, would be great. But Nike says talk that I don't expect to be down for long. Let's just say that. I mean, it's all time highs like 180. It's not one that I'm expecting to be at this deal for a very long time. I'm expecting sales to pick up anytime soon, and then for them to just start doing stock buybacks, and we're going to see this stock shoot up where it should be. It's frankly just a matter of time. So I'll probably continue to buy every 3 or 4 weeks or so whenever I get some cash available. I have some cash in my portfolio now, but this is only for per policy. I like to keep around 20%, 25% of my portfolio worth in cash. Over the last year or so, we're up about $800. We're up about $885. Over the past year, we're up about $900, and overall on Robinhood, we're up $75,000. So we're still, we're still in a really good spot. This was a crazy time. Yeah, if you were in the stock market any time between 2020 and 2021, you were having a great time. I mean, at this time I was able to turn what my net worth was like $20,000. I was able to turn it into $130,000, and not only from Robinhood, but from other brokers as well. So yeah, so it's to recap is investors got what they wanted. Obviously, it's great that they came with a 0.5% cut, because if it would have been any less than that, just trust me, a green inside would not have been here. It wouldn't have even been a thing to consider to be a green. If we had a 0.5 cut, investors were not going to like that. Even the economy was not going to like that. So the Fed actually stepped up, took a good look at how the market looked and what the plan is to move forward. They aim to keep the labor market strong and continue to boost economic activity. But again, Powell was also cautioning against assuming that future cuts would be at the same pace. So, and again, we're still expecting a 1% in cuts by the end of 2024. So we're talking a possible 0.25 next month, 0.25 in maybe November or December. So that's up to Powell to decide how he feels on that day. But again, thank you guys for watching, and you guys have a great day.